Hey guys, welcome back to another trade day recap video. If you guys are enjoying these, please let me know by hitting that like button. I sincerely appreciate you for sticking around. It helps the channel grow and I thank you for that. But without further ado, let's get started. Today was unfortunately a red day in the evaluation. In fact, I consider today one of my most undisciplined days of trading. I completely broke one of my rules and it cost me big. I lost almost half my drawdown. That's right, my loss amounted to about $460 after commissions. And I wanted to reiterate that the drawdown is only $1,000 because this is a 10K evaluation. I've taken many evaluations before, failed them, passed them, but I can't recall one where I was almost at the finish line and then I took an idiotic trade that was uncalled for and that sent me back this much, all because I jumped into something without thinking it through. So if nothing else, please let this video be a lesson to all you guys and I'll explain what happened. So this is a 180-day 4-hour chart for gold. And we're always looking at this time frame to establish where the trend is going. And we do that by using the Ichimoku study. So let me pull that up. So you can see gold is still above the Ichimoku cloud after having this ridiculously bullish run. The Tenkan line is still above the Kitchen line, and the Chiku line has not yet met price action, although it looks like it's getting close, and that would obviously be a signal to get out if you were long on the trade. But anyways, let me get rid of this study so we could see the chart clearer. So at the time of me trading this was the current candlestick right here, and this was right around when the market reopened at 6 p.m. Eastern time. But before I even got into the trade, I always use a Fibonacci retracement to find my entry so that way I can manage my stop loss, which is ultimately managing my risk, and that is bar none the most important thing in trading if you want to sustain this as a career. I did not do that, and that's the reason why I lost in the manner that I did. So the Fibonacci that I drew was an extension from this high to this high. So my plan was to get into the trade if it dipped to either the 50% retracement or more likely the 61.8% retracement, just based on how the chart was set up. So let me show you what happened by switching over to a shorter time frame. So usually I have my price alerts set up when price action goes to a certain price so I could get ready for my entry. But immediately the first 2-minute candle of market open dipped so fast to both retracements and got bought back up. I got to my computer just after this move and didn't even have time to react. I was frustrated that I missed the dip that I wanted, so being high on my conviction of it going higher, I just jumped in 5 micro contracts like an idiot around the top. And slowly but surely, gold started to come back down. I had no stop loss and therefore no risk management. I had no idea where I was going to get out, and all I could see is my P&L getting redder and redder with the amount of overbought contracts. I wasn't trading anymore. I was gambling at this point, which is so stupid and completely avoidable if you respect your strategy and follow your rules. So I eventually got out around here for a big loss. The proper thing to have done in this situation instead of buying at the top was to switch over to a 15-minute chart. Draw a Fibonacci retracement from this low to this high. And watch how price action pulled back to nearly this shorter time frame 78.6% retracement and the long-term 50% retracement. Adding excellent confluence, and as you could see, gold ran as predicted all the way to this 23.6% retracement. Obviously, hindsight being 2020, I should have just held through, but I didn't want to risk losing more of my drawdown and ultimately failing the evaluation. I couldn't even trade the morning session afterwards to make up the loss due to errands and appointments. So here's my final account balance for the day. So now my plan is to continue to have $200 to $300 trading days because I still have to be mindful of that 30% consistency rule, and I don't want any one trade to exceed that percentage of my total P&L. And I'm very confident I can do this as long as I stick with my strategy. So I'll continue to update you guys. If you guys are interested in doing your own evaluation and want to support this channel, consider clicking the affiliate link down below and using the discount code that I provided for a 20% off. Other than that, if you enjoyed this video, please hit that like button and consider subscribing for more content. Take care, and I'll see you guys next time. Hopefully a green day this time. Peace.